Hello friends, welcome to Reur's tutorials. Today we'll be studying the introduction of financial management. So, what is finance? Finance, merely we can just say that finance means money. So, for everything we require money, whether it is management of house, management of yourself, management of a company, management of a small business, money is required. Without money, there is nothing. So, in every business or every field, we need to understand what is finance. We say the art and science of managing money or management of money. Secondly, it is a study of value. Thirdly, it is a study of how to make good decisions that involve money. That is, what assets to buy. Secondly, how to pay for the assets you buy. So, we'll come back. The art and science of managing money or management of money. That is, whenever you say arts and science, there are certain principles which are applicable. So, there is a principle that is applicable for management of your finance. It is the study of value. That is, the value of money goes on changing. The value of rupees 100, which was 10 years back, is not the same of that as today. The value of money goes on changing. It is a study of how to make good decisions that involve money. That means what? What assets to buy. Now, for example, you want to buy something. A very simple example, you want to buy a pen. You always think which pen to purchase, which is good for you, which will long last, which will write very nicely. There is a smooth flow of the ink. Such things you purchase. That means from minute to minute things to a very big level, we always think while purchasing something. In a big organization, when you purchase assets, so you always think what assets to buy, which are profitable to you. Next is how to pay for the assets you buy. For the assets you buy, there may be a direct payment. As I took the example of purchasing a pen, you give money and you purchase it. But what about the bigger industrial companies? When you are purchasing big machines, how do you pay for your assets? You don't pay it as a cash. There are different ways. There are methods, there are principles that are applicable for the payment of the assets that you purchase. Okay, so this is what is finance. Value creation components. There are two major important components: time and uncertainty. Yeah, time passes off. Time value of money we see. As a given example in my last slide, as the time changes, the value of money also changes. Next comes is uncertainty. There is always uncertainty and risk in your business. Now, for example, consider you have started a new business, new venture in the month of February. Okay? Consider you have started a beauty parlor. In the month of February, you have invested lots of money. You have made all the survey. Further is a marriage season. You have thought you will earn good amount of profits and you started a beauty parlor. But suddenly what happened? On March 13th, there was a pandemic. All of you know that. COVID-19 attacked India, even Gulbarga. It was the first case. So what happened? We entered into the status of lockdown. Each and every business was stopped. Each and every education institutes were stopped. Complete movement was stopped. It was a total lockdown. So that you can consider it as an uncertainty. These uncertainties may arise at any time. Okay, so we should be very careful how to manage these things. These are the components which may occur. I don't say always, which may occur. We should be prepared for that. Yeah. Why study finance? We have marketing, accounting, management, personal finance. Everywhere finance is required. Marketing. budgets, marketing research, marketing financial products. In accounting, dual accounting, finance function, preparation of financial statements. Management, strategic thinking, job performance, profitability. Next is personal finance, budgeting, retirement planning, day-to-day cash flows, all these things. So everywhere we require finance. Yeah, key issues in finance. Where to raise financial resources from? Wherein to invest such resources? How best to manage the production distribution function? Next is how much of profit to distribute and how much to retain. So in this financial management, in the further topics, you'll be studying complete detail about all these four questions what you're seeing over here. These are the major points what we have to think. Where to raise the financial resources from? That means from where you should get the money to purchase your asset to start a new venture. Wherein to invest the resources. If you invest in which of the venture you get more profit. In such resources you are going to invest. How best to manage the production distribution function. This is very important. When you want to earn wealth as well as profit, production is very important. Not only producing and keeping it, distribution is also very important. Lastly, how much of profit to distribute and how much to retain. So all these days you have learnt about shares, debentures, joint venture companies. So certain part is retained as retained earnings for future investment. Some part of the profit is distributed. So what is that? What share it should be? That will be learning further in detail. So these are the four main issues in finance. So what are the main subjects of finance? Financial management, capital markets, and investments. Right at present, we'll be studying about this financial management. Yeah, what is financial management? Acquisition of funds at optimum cost and its utilization with minimum financial risk. Secondly, it is concerned with management of fund. Yeah, just to explain this, acquisition of fund at optimum cost, getting the money at a minimum cost, utilization with minimum financial risk. Always there is a risk in business. Risk and return should run parallel. So this is how is the financial management. It is concerned with management of fund. You have money, you're going to manage it in a proper way. Yeah, we are coming back with the same questions. How much and what type of assets to acquire? How to raise the capital needed to purchase assets? How to run the firm so as to maximize its value? So we'll be learning about these questions. Yeah, I'll come back again for the meaning of finance first. Finance is defined as the management of money and includes activities such as investing, borrowing, lending, budgeting, saving, and forecasting. There are three main types of finance: personal finance, corporate finance, and public or government finance. Business finance is raising of funds and proper use of such funds for the purpose of making profit. So, we'll study the meaning of financial management now. Financial management means planning, organizing, directing, and controlling the financial activities such as procurement and utilization of funds of the enterprise. It means applying general management principles to financial resources of the enterprise. We know what is finance, we know what is management, we have studied. Finance, generally you consider it as a money. Management, you have completely studied what is management, managing the things. So here, financial management is nothing but you are managing the funds what you have. So for that, you require all the principles of management, that is planning, organizing, directing, and controlling. So why you require these principles is how to take money, get money, I say procurement, and how to utilize them, how to get your resources and how well to utilize them so that you earn maximum profit. That itself is a financial management. Yeah, some more meanings of financial management. Financial management is a part of the management activity which is concerned with the planning and controlling of firms' financial resources. Generally, we can say that financial management is a part of management which is covered with raising of funds in the most economical manner and use them profitably. This will be our ultimate aim. What is that? Get money. Okay, taking money and utilizing it. So how to take the money, that is raising funds in a most economical manner. If you are taking some loans, that should be with a very minimum interest. And how to use these funds? The use of funds should be such a way that you should be able to earn lots of profit. Clear about these girls? This is the meaning of management. Yeah, we'll go for the definition. Professor Ezra Solomon defined financial management is concerned with the efficient use of an important economic resource, namely capital funds. In other words, financial management is an activity which is concerned with the collection or raising of finance and its effective utilization for the attainment of common objectives of the business enterprise. So here I would like to say ultimately financial management is an activity where you are raising the fund in a more economical way and utilizing those funds to earn lots of surplus. For this, you have to make lots of work. There are principles you have to apply, calculate how to get the funds, how to utilize them in a profitable way. Okay, so we'll proceed further. Yeah, we'll study about the nature of financial management. The nature of financial management refers to its objectives, scope, and functions. Okay, so here we'll be studying them as the objectives of financial management. So we have two types of objectives or two main categories of objectives: basic objectives and other objectives. Basic objectives are: first one, maintenance of liquid assets; second one, profit maximization; and third objective is wealth maximization. These are the most important: profit maximization and wealth maximization. As other objectives, you have to protect liquidity and solvency of the firm. Secondly, to utilize the available financial resources effectively, to provide social welfare, to build up adequate resources for financing growth and expansion, to ensure a fair rate of return on investment of equity. Okay, so these are the two types of objectives: basic objectives and other objectives. Yeah, we'll start studying one by one about these objectives. Maintenance of liquid assets. All of you know about the liquid assets. What are liquid assets? Liquid assets are those assets that can be easily converted into cash in a short time or short amount of time. Liquid assets include things like cash, money market instruments, marketable securities. Financial management assures that there are adequate liquid assets, that is cash in hand, to meet all its obligations.